You've been doing extra shifts, hitting those savings goals, or maybe you got a lucky bonus to get your hands on $1,000. You're probably wondering, how can I make this $1,000 work even harder for me? In this video, Dave Ramsey, a radio personality, successful entrepreneur, and best-selling writer, will give a cheat sheet on how to grow your grand into something much grander and accumulate wealth in the long run. On to the first investment with your $1,000 is to buy an S&P 500. The S&P 500 is like a giant scoreboard that shows how well the top 500 companies in the U.S. stock market are doing. Many intelligent investors love to put their money into funds that copy this index because it gives them a diverse mix of stocks in one go. Dave Ramsey suggests that investors have historically seen an average yearly return of 12% on their stock investments. Reflecting on the historical performance of the S&P 500 over the past couple of decades leading up to February 2024, the index has demonstrated an impressive average annual return of approximately 9.74%. To put this into perspective, if you had invested $1,000 in the S&P 500 20 years ago, that initial amount could have grown to around $2,533 today. Notably, Ned David Research, NDR, reports that in years when the S&P 500 achieves at least one record high, there tends to be a median annual increase of approximately 15% for the index. And here's the cool part about the S&P 500. You don't have to go out and buy shares of all 500 companies yourself. That would be a lot of work. There are these things called index funds that basically copy the S&P 500. These funds usually own most stocks in the S&P 500 to copy its performance. They sell shares to investors like you so you can benefit from diverse investments. When selecting the right S&P 500 index fund for you, consider these points. 1. Minimum investment. Make sure you can afford the minimum investment required by the fund. 2. Expense ratio. Look for a fund with low fees to keep your costs down. 3. Inception date. Pick a fund with a more extended history to see how it has performed over time in different market conditions. 4. Dividend yield. Check how much dividend income the fund offers, as it can boost your returns. The second thing you could do with your $1,000 is put it in an IRA. IRAs are like special savings accounts that help you save money for retirement. When you put money in an IRA, it grows without you having to pay taxes on the earnings, especially if you start saving early. There are different types of IRAs, each with its own benefits. Traditional IRA and Roth IRA. Comparing the two. Roth IRA. If you go for a Roth IRA, you won't get a tax break on your $1,000 contribution up front, but your money will still grow without getting taxed. The best part is, when you take out your money in retirement, you won't have to pay any taxes on it. On the other side, with a traditional IRA, you can lower your income taxes by deducting the $1,000 you put in as long as you meet certain income limits. Plus, any money you make from your investments can grow without tax. You can open an IRA if you don't have a retirement plan at work, like a 401k, especially if you're self-employed. But even if you have a 401k, you can still open an IRA to save more money for retirement. You can set up an IRA at a bank, with an investment firm, online, or with a personal broker. Another place to put your $1,000 is on a certificate of deposits. Imagine you lend $1,000 to a bank for a year at a fixed interest rate, and at the end of the year, the bank returns your money plus a little bit more as interest. That's essentially how a certificate of deposit works. Certificates of deposits, CDs, are a financial tool offered by banks and credit unions that allow you to invest a specific amount of money for a set period at a fixed interest rate. Why stake on a CD? 1. Safety first. CDs are super safe. They're insured by the FDIC, Federal Deposit Insurance Corporation, for up to $250,000 per depositor per insured bank. 2. Predictable growth. Unlike stocks that can go up and down, CDs offer a steady, predictable return on your investment. And if you want to make more money with CDs, here's the scoop. Shorter-term CDs are giving better interest rates than longer-term ones. For the savvy investors who want to go big with their $1,000 bet on stocks. Stocks represent ownership in a company. When you buy a stock, you purchase a small piece of that company. Companies issue stocks to raise money for various purposes, and investors buy these stocks with the expectation that the company will grow and become more valuable, thus increasing the value of their investment. But how do you know a valuable company? A company that will return huge profits to your $1,000? Well, one way to do this is by looking at the price to earnings (PE) ratio. This ratio helps you determine a stock's value by comparing the current price to the company's earnings per share (EPS). The PE ratio shows how much investors are willing to pay for every dollar the company earns in profit. A low PE ratio compared to similar companies in the industry might suggest that a stock is undervalued and could be a good value investment. However, other considerations like the company's growth prospects, financial health, industry trends, and other market conditions are essential, and they can be checked on Global Data, MarketLine, or IDC. After analyzing the company you want to invest in, open a brokerage account. Here are some of the leading brokerage accounts available globally to choose from. 1. Interactive brokers. With Interactive brokers, you can invest globally in stocks, hedge funds, metals, currencies, and more, all covered by their user-friendly platform. Additionally, you can trade in 150 markets across 34 countries using their advanced tools that make selling a breeze. What's great is that you can fund your account and trade in 27 different currencies, giving you flexibility and convenience. On top of it, they offer commission-free trading. Plus, when you open a free account, you may snag a free stock worth up to $1,000. How cool is that? But wait, there's more. If you have extra cash in your account, they'll allow you to earn up to 4.33%. So not only can you trade globally with ease, but you can also make the most out of your uninvested funds. Open an Interactive Brokers account now to start your investing journey. Click the link in the video description to create your account. Another brokerage account is SoFi Invest. SoFi is a special finance company that wants to help you with your money. They offer a really good interest rate of 4.60% APY on both SoFi checking and savings accounts, which is better than what many other places offer. 3. Plink. Created in 2021, Plink could be a great choice for you if you are new to trading, interested in converting unused gift cards into investment funds, or eager to expand your knowledge about investing fundamentals. 4. Fidelity Investment. Fidelity Investments is a fantastic option as it provides no commissions on stock or ETF trades. Additionally, they offer a variety of no-expense ratio index funds that cater to both beginner investors and those who are more actively involved in trading. 5. Robinhood. Robinhood excels as a commission-free ETF broker with no fees on stock, options, or cryptocurrency trades. And suppose you upgrade to Gold for non-retirement accounts. In that case, you earn a 5% interest rate on uninvested cash, access to professional Morningstar research, NASDAQ market data, and the opportunity for margin investing at 8%. 6. JP Morgan Self-Directed Investing. With JP Morgan, you can start trading with just $1 using the easy-to-use app. And as a self-directed investor, you get to make all the decisions about where to invest your money. You can choose from a wide range of investment options like derivatives, futures, and cryptocurrencies. Plus, you save money because you don't have to pay any management fees. And 7. Ally Invest. Ally Invest presents highly competitive pricing for stocks, exchange-traded funds, ETFs, options, and mutual funds, setting it apart as a top-tier stock brokerage service. With no minimum account requirement and zero commission fees on eligible U.S. stocks, options, and ETFs, Ally Invest stands out for its cost-effective trading solutions. Now, let's get back to what you can do with your $1,000. Invest in Treasury bonds. Treasury bonds are a way for you to lend money to the government. It's like you're giving them a loan. They pay you back with interest over time. It's kind of like the government saying, "Hey, can I borrow some cash, and I'll pay you back with a little extra later on?" Now, why invest in them? Well, they're super safe because the government backs them up. So, it's like investing in something really secure. Plus, you get regular payments, which is nice if you want a steady income, and they can help balance out the risk in your overall investment mix. Currently, short-term bonds are giving higher returns than some longer-term ones. For instance, on May 3, 2024, 3-month Treasury bills provided 5.45% returns, while 2-year Treasury yields were at 4.81%, and the 10-year Treasury had a yield of 4.50%. To start investing in Treasury bonds, open an account with Treasury Direct or a brokerage firm. Select the type of bonds you prefer, make your purchase, and monitor your investment. And finally, for those who want a more hands-on approach with their $1,000, start a passive business. Nowadays, with technology, there are many opportunities to generate steady income streams with minimal upfront costs. These ventures have the potential to not only earn you money, but also provide lasting returns in the long run. Let's start with the idea of building a website. It can be a lucrative venture that doesn't require a warehouse full of inventory or hefty overhead prices. With just $1,000, you can kickstart your website journey by purchasing a domain name, setting up hosting services, and crafting engaging content for your site. Another exciting opportunity lies in creating online courses. This avenue lets you share your knowledge and skills with a global audience while reaping financial rewards. Marketing your online courses or your digital products shouldn't be hard. Join Workerd.com, a platform where you can advertise your business for free. With a Workerd account, you can showcase all your deals and products in the UK, US, or worldwide. Utilize this best classified ads site to sell digital products, offer services, and earn money around the clock. Search Workerd.com on your browser, sign up, and create a free ad today. Investing in a passive business adds diversity to your investment portfolio. It opens the door to recurring income streams with minimal ongoing effort. Why wait? Only a smartphone or a laptop and an internet connection. Imagine achieving financial success like Dave Ramsey did, from nothing to amassing a 7-figure net worth and a hefty $250,000 annual income by age 26. His story is living proof that taking action can lead to incredible results. So, here's your opportunity. Take that $1,000 you have and invest it now. Seize the moment and take the risk, because sometimes the perfect opportunity comes only once. Subscribe, like, share, and watch the next video.